to the weekly ACG New York podcast. I'm Vikash Magdani, Executive Director of ACG New York. ACG, of course, is the largest and most influential committee-steered, member-based network for the global middle market private capital community. The network focuses on promoting best practice, knowledge, intelligence, thought leadership for capital providers, industry executives, and those that service them, whilst providing a concierge platform for deal making and fundraising. And the ACG New York weekly podcast invites members, partners, and special guests to discuss key themes and topic points in the world of global middle market private equity. And today I'm very pleased to have with us Marcia Nelson, who is Managing Director of Alberleen Family Office Solutions and also sits on the board of ACG New York. Hello to you this morning, Marcia. How are you?
Good morning. Good morning. Thanks for having me. I'm super excited to be here today.
We're super excited to have you. I must say, for those that are watching and for the viewers listening in, I don't just say this. Marcia is one of the nicest people you'll ever meet.
Oh, my goodness. Thank you. Thank you very much.
And in this time when there's so much, negativity, I guess you would say, or just unpleasantness around, it's nice to be a little buoyant and jovial and chirpy, and no better way than to have you on the weekly podcast, Marcia.
Oh, good. I'm glad to be the cheer and the Pollyanna in the middle of the crisis.
So we're into week 3 of self-isolation. We're all in our home offices. I'm in my son's bedroom. I'm trying to move around room by room. How has your setup been, and how are you faring in this time, 3 weeks in?
Well, luckily for me, my husband has been working at home for 25 years. So he's actually been my sanity. So he's advised me on how to stay sane during all of this. So, the good thing is we are empty nesters. So our children are in different cities, self-isolating. So it's just my husband and I in our tiny New York City apartment, but headphones and technology are our friends. That's what we've decided.
Right. I know it's a new norm, isn't it? Certainly in the interlude.
It is.
Or the interim.
It is.
You're in New York City, of course, on the Upper West Side, if I'm not mistaken. We're getting a lot of news about people walking around when they shouldn't, going to see battleships when they shouldn't, in hordes. What is it like? I'm getting certainly lots of calls from people in other states, quite worried. And I know we'll go into the vagaries of what's going on right now. But what is it like on the streets of New York? Do you get out much?
No, we never leave our apartment, including going down to get the mail. We go every other day to get the mail from the lobby, and we left our apartment one day last week to get a prescription filled. But other than that, we stocked up. We were lucky. I got a fresh direct order last week, so I'm very happy about that. But I will say, when we went out last week for a half hour just to go to the pharmacy, I was surprised how many people were out. I did have to do another follow-up prescription on Friday last week, and there were a lot fewer people out. So it's usually, I see people walking a dog, couple of people jogging, and a few people grabbing groceries. But for the most part, there is nobody around out on the streets.
And I do hope Sorry, for those that are out, I hope you saw that they're keeping their distance, at least the allotted distance.
Yeah, even when you pass somebody on the sidewalk, everybody kind of moves sideways, and people like halfway make eye contact, and they're like, "Which way are you going to move?" And they move long before you get there, so it's not like where you stop in front of somebody. And, oh, which way am I going to go? People are keeping their distance. Other than I did saw a lot of photos of people out yesterday going to look at the ship. Yeah. But for the most part, I think people are obeying the rules.
Yes.
At least in Manhattan.
Well, that's good to know, and certainly you're there on the hot spot. So we wish you well, and
thank you.
Stay healthy and well. I thought, Marcia, for the viewers and the listeners, we could find out a little bit more about you. I've known you for quite a while now, but never really probed into your history and how you got to Alberleen and and then the family office world, which is really what this podcast is about. So a bit more about yourself, please.
Yeah, so briefly, I'm originally from Utah. I moved to New York 30 plus years ago, so totally dating myself. Spent the first 10 years of my career living the Devil Wears Prada life. I was at Condé Nast, working for a couple of the fashion magazines, and then Com came along, and the world magazine started to fold, and I got recruited to work for for a very wealthy philanthropic family. I worked for a billionaire family. I say when $1 billion was a lot of money, that was it was a big deal, which is crazy now to think about that. And that was my first foray working for a wealthy family. They were very active in education and supporting education, and then they were also very active in the arts community. And I really learned a lot from working for them. And then ultimately, I went back to graduate school to get an MBA. I really wanted to do more with my career. Yeah. So I live around the corner from Fordham, so it was an easy commute. And when I started back to school, I had a 4-year-old and a 1-year-old, and I was working full time at the Carlisle Group and going to school at night. And I did that nice part-time program at Fordham, and then got a job working for a valuation firm, but more on the business development side. Oh, I'm sorry. In between there, I actually worked for another family office. So worked for a family office, then I worked for a valuation firm, and then I spent about 15 years doing business development for valuation and accounting firms. And I am in my third time working for a family office. So I'm back in the midst. With a little more experience behind me and a little more focus on the financial side rather than the more focus on the financial side than the philanthropy side at this point.
Right. And you must tell us a little bit about the office that you're in now and your remit within, please.
Yeah, so the Alberleen Group is a holding company, and then I work for Alberleen Family Office Solutions, which is partly owned by a wealthy Asian family. And we were set up to be boots on the ground for the Asian family that was looking to make investments in the U.S. My role is finding other families that are interested in co-investing with us on deals. And I've sort of broadened that a little bit and actually looking for deals that we get from other families. We also have a broker dealer, so we can do more traditional sort of boutique investment banking, but our primary focus is on the principal investing side.
Wow. And you've been there how long?
4 years.
Wow.
Yeah.
Wow. So, I mean, obviously ACG and ACG New York within is very much middle market private equity geared.
Sure.
And we've certainly seen the rise of family offices in the last decade. So I was reading some stats in preparation for this. Private equity fundraising in the US was in over time during the past decade with annual figures climbing from less than 60 billion in 2010 to a record 301 billion in 2019. And with that, we saw the surge in fundraising in 2017 and 2019, so last year. There's a lot of dry powder out there, and family offices within worldwide, I would say, love private equity, and those in North America make the most investments in the asset class. Another little stat for you that you probably know. So almost 81% of family offices in North America invest in private equity as limited partners, fund-of-fund investors, independent investment sponsors, and that's according to Fintrex, which is the family office database. Sure. And so today I thought, Marcia, we could discuss how patient and resilient family office capital really is, especially in these times.
Sure.
Particularly as it pertains to private equity deals, in which family office investments in direct and co-investments have seen a surge, certainly in that decade that I spoke about. So before we go into the future and your crystal ball with it, like I said, we've seen a surge in the last decade. Why do you think that is? I mean, you've been there, done that, worn the T-shirt. Why have more and more family offices gotten into the private equity class?
Well, I think there's two reasons. One, I think post 2008. There was a flight away from funds, and I think there was an anti-Wall Street perception and I think people said, whoa, I can, why am I paying all these fees? I can do it better myself. And then I think some families realized that they couldn't do it better themselves, and they really depended on the professionals. And then I also think some of the larger families said, well, I can't do it myself, but I have to hire the professionals. So I think that was a little bit of a shift, and I think that's part of it. And then I also think that private equity has just shown that the numbers and the returns have shown that they can be really agile, and they can produce better returns than just straight up stock investing.
Yeah.
And I think families have said, "Wow, this is a way for me to increase my, increase my wealth."
Yeah.
And then I guess actually there's a third reason. I think a lot of wealth came from financial institutions.
Right.
So I think families are comfortable. Some family offices came out of private equity or hedge funds, and they're very comfortable with the financial markets, and they understand the rules of the game. And so they're very willing to put capital back into those investments because they made money themselves.
Yeah. Well, obviously with family office capital and all the other powder that is out there, valuations went through the roof.
Yes.
Family offices made the entire scene quite competitive, really. But, so that was the last decade, if I could say, and it's been a buoyant one. But 90 days ago, we stepped into a new decade, arguing whether it was actually a new decade. And today, Marcia, we're in a much different world. So I thought today, look, on the last day of Q1, let's take a collective breath and rewind. So let's go back into, I know,
exactly,
and breathe. So, and we've seen quite a bit of one another in the last 3 months or so. But if you recall back to January, imagine Christmas is over, it's the new year. We're in January. What does President Trump do? He orders the strike, killing Iran's top commander, if you remember, Qasem Soleimani. Oil prices and geopolitical tensions soared, then fizzled out, if we remember. What else happened? BlackRock CEO Larry Fink, if you remember, he said they're doubling down on confronting climate change. So that was quite a watershed moment for the environment's role in business decisions.
And we had a little bit of trade. We had a little bit the trade war. We were there were farmers hurting, and so there was some political changes to support the farmers who were losing money on their soybean crops. So we had some of that too, propping up that sector of the market a little bit.
And then it was phase one of the trade deal with China. So that calmed down 2 years of tension. The UK, we finally Brexited. And and that was, if you remember, that was the first month that certainly I started really hearing about this virus when China locked down, 50 odd million people as the virus spread. Do you remember when you first heard about it and what your initial take was and your thought?
Well, certainly. So we're backed by a Chinese family. So we're very conscious of what's happening in China. But our first thought was, this will be, like SARS. It will be like some of the other epidemics that we've seen, and it will be locked down really quickly. And so we won't be traveling. Our CEO won't be going to China in the near term. And that's kind of what we thought it was going to be. We thought, okay, this is going to be locked down. It'll be cleaned up. We'll be back to business as usual in 6 to 8 weeks. That was our original thinking around this.
And I remember we had January 30th, a very private family office breakfast.
Sure.
That briefing on how family offices will invest with a potential recession looming. Gosh. So then February kicks in, Marcia, and the Iowa caucuses, they were a disaster, weren't they? A technological disaster.
Yeah.
And then the Fed says early on that the virus could pose a risk to the US economy, but didn't really do much with it. Oh gosh, a lot happened. Harvey Weinstein was convicted. Bob Iger.
Yeah, so we were all focused on Me Too.
Yeah. Yep. But by late February, China was somewhat slowly getting back to work after weeks of quarantine, and the US started preparing for the outbreak.
Well, first we had Italy in there. And I know that because my husband and I had a trip to Italy planned. And we had just finalized our hotels. We just bought our La Scala tickets.
Oh,
We just bought our tickets to the Vatican. We were planning to go on April 22nd.
yeah,
So I was looking at how do I get from inner growth in Las Vegas. My biggest concern was inner growth to Milan. That was how do I figure out how to do that? That was the prescient thing on my mind.
yeah. Intergrowth, of course, for those that don't know, is ACG Global's big behemoth event, week-long event, which
Yeah.
this year we were all very excited. It was going to be in Vegas at the Aria Hotel and Casino, but sadly they had to cancel it. So then we go into March, and Joe
Yeah.
Biden, if you remember, takes the lead in the Democratic primaries.
What
And
a
people like
surprise. Yeah.
yeah, and people like Elizabeth Warren ended their campaigns. You had Saudi Arabia starting an oil price war. Oh gosh, the US. I think it was this month that we've really started feeling the coronavirus, and companies
Sure.
start working from home. Sports cancelled, universities
But
closed. Oh gosh,
but but even then, Vic, it felt like it just happened overnight. So my husband, as I said, my husband and I had a trip to Italy planned, and we said, okay, well, we can't go to Italy, but maybe we'll go to DC. So we'll do sort of a U.S. staycation. We weren't even thinking that U.S. was going to be shut down. We were just thinking, oh, that's a bummer. We can't do our trip.
yeah,
And we were, I was going to conferences. I was speaking at conferences. So I was speaking at a conference on a Wednesday, and
mhm,
on Thursday, my boss called us all in and said, if you want to work from home, you should work from home. And and uh, and then my husband and I went out and bought lots of theater tickets because we said, "Woohoo! Nobody's coming." Nobody's coming. It's a great time. Everything we want, everybody's canceling. So we went out and got theater tickets for the month of March. And then 3 hours later, Broadway canceled. And the next day, my firm shut everybody down and said, work from home. I mean, it was literally like within 24 hours.
yeah.
So I am a little worried about my plants that are dying on the
Oh, oh,
windowsill at my office. And I think I left some boiled eggs in the refrigerator.
yeah,
So a little concerned about that because who knows what that's going to be like when I get back to my office. But I mean
yeah,
that should be the least of my worries. But it just happened so quickly
mm,
that I just felt we just were all unprepared, right?
yeah. No, absolutely. And with that, in an emergency move to save the economy, I guess the Fed
Sure.
cuts interest rates to half a percentage point. What else do we have? Oh gosh, you had the March 9th stock plunge that tripped the circuit breaker. The Dow enters a bear market. Oh gosh, it's. But what I'm happy to
Well,
say,
now we have the CARES Act. We
yeah,
definitely have some stimulus that hopefully will help support some of the companies in the U.S. in at least in the short term.
yeah. Well, I was going to ask, by we've sort of mobilized, we've galvanized. We're into, you could say, the private sector certainly into a wartime economy.
Yeah.
Um, non-essential businesses were closing, and we've got over 3 million people filing for unemployment. But how are you faring at this time? You sort of have alluded to it. Your thoughts on the virus, the government response, be it our federal-owned government here, worldwide. Your general reaction thus far.
On the virus or
The virus
on middle
and the effect,
market?
yeah, on the virus, the effects that it's had. And then I guess we'll look into the next 12 months if we can, and how that fares for your business. But you personally, how have you felt that the government has responded? Has it been fair? Has it been good to private business, the public markets? Just your general reaction.
Sure. Personally, I wish we had had a fast and swift shutdown.
Mm,
Like I wish we had locked everybody down for 2 to 3 weeks to, basically break the chain, right? Um, I think slow city by city, neighborhood by neighborhood has probably made this a longer and more painful than it would have been if we had taken steps worldwide. I'm not just talking about the U.S. government. I'm just saying if we had taken steps worldwide to just say, okay, everybody's on vacation for 2 weeks, but you're staying in your house. And if everybody did that and didn't, and if everybody did the physical / social distancing, I think we would have broken the chain of infections. So I'm disappointed. I'm disappointed when I see people outside. I'm disappointed when I see pictures of people, um, you know, going out to see the boat, which I think it was a really cool thing, but not taking it seriously enough to make sure that they're staying 6 feet from other people. Because I think it's going to be a longer, more drawn out process,
Yeah.
unfortunately.
Yeah. And with that, I must ask about the financial markets. We've alluded to what's gone on in the last couple of weeks. Obviously, we've seen a stimulus package, but how do you think the next 12 months, now if we can look ahead, I know it's hard
Sure.
to extrapolate, but how will the markets look like? And with that, how are family offices reacting to the current situation? So how are you sort of managing the crisis in-house?
Sure. Sure. And again, so I'm going to reiterate, this is my personal opinion. This is not my company
Yep.
opinion.
Yep.
This is just me having conversations. I'm probably busier than I've ever been. I have conference calls from 9 in the morning to 6 at night, and I try to just make sure that I kind of keep my work schedule a work schedule. So that's been my sanity.
Wow.
But as I'm talking to other families, um, I like a lot of people are saying, look, my stocks are down, but they're down now to where they were last November, right? So if you really put it in context, and if you like take a deep breath and step back, put it in context, and you say, okay, but I'm much better off financially than I was 10 years ago. Like, we've had this huge run up and this great bull market.
Yeah.
So I don't know that, we don't know where the bottom is. And I think right now we've kind of hit a nice sort of steady, a sort of a steady state. At least maybe this is the calm before the storm.
Yeah.
But as I'm talking to other families, it's almost like business as usual. Those families that were prepared, that had cash on hand, they have cash on hand to support companies that they've already invested in. I think they are taking advantage of the CARES Act, not taking advantage in a negative way, but I think they're saying, here's an opportunity to help prop up a company because we know that this is short term, and if we can keep these companies going in the short term. And I think there are family offices that have capital ready to say, look, there could be a buying opportunity come the fall. There might be some
Yeah.
opportunities that will be good for us. So I think the majority of the families that I'm talking to, and certainly our family office, are kind of taking a little wait and see attitude. Hunker down a little bit, but wait and see. But I think they're saying, okay, 6 months, 12 months from now, we'll be in a whole new world, and we'll bounce back. But I
Well,
think this is going to be the lost year. I think people are
yeah.
going to look at 2020 as a lost year.
Wow. Well, tension is obviously quite high, and the family portfolio has to be protected. I guess
Yes.
that's the priorities are changing. So while some months ago and even now, while I hear you talk, some families might have decided to explore riskier assets like private equity.
Yeah.
Now, am I hearing that perhaps risk management and wealth preservation is still top priority? I mean, we had already seen big deals being cancelled due to high uncertainty in the marketplace. So, how is just to home in on your daily operations again? How has the virus impeded your day-to-day movements? And do you think, with that said, that family offices may pivot away from PE in the future? Do you see that coming? Will they hold back somewhat?
I don't know that I see them pivoting away from PE, but I do see a pivot in the sectors people are looking at. And
Right.
I am seeing more family offices more interested in earlier stage, more venture deals, especially around healthcare. So I've had several conversations with some other family offices around an interest in finding solutions for the virus. So a lot of families are saying, okay, I'm willing to put some of my capital to work if I can support a biopharm deal that's going to provide a vaccine or some treatment for the virus. I'm starting to see a lot of families saying, "Wow, like telemedicine and telehealth is the wave of the future." And I'm sure many of us said, "No way will I ever want to talk to my doctor over video chat." And now we're forced to do it, and we're saying, "Oh, that's not necessarily a bad thing." So I'm seeing families saying, well, maybe this is a way to solve our global healthcare issues, and maybe there's a way to support, through telemedicine we can support our population a little better. So I'm definitely seeing that. We're looking at some deals in that space. Another area I'm seeing a lot, and maybe just because we're aware of it, is cybersecurity. Now that we're all using technology much more, we're much more aware of where the flaws are, and hearing stories about people having Zoom conference calls getting hacked, and all of a sudden it makes us aware that we're really not as prepared as we think we should be. And then our family office has been looking actively at affordable housing. So we have a couple of partners that we have been talking to over the last year. We've been doing some due diligence in affordable housing, and we definitely think that there was already a crisis in affordable housing. And I think with the shutdown in construction and people losing their jobs, that's going to be like the perfect storm. That there's going to be a tremendous need for more affordable housing, and we are just not going to have enough housing available for all the people who need it. So I think there are sectors that are really going to come out of this really, really strongly, and I think that families are going to be willing to put their money behind some of these sectors.
Yeah, but do you think now you'll be, with your crystal ball in front of you, be able to invest at a lower price compared to before the spread of the virus? Do you think that will happen naturally?
Well, I think there are going to be some areas that it will happen naturally, but then I also think that the hot sectors are going to the valuations are going to increase. If you're looking at a biofarm treatment for coronavirus, my guess is, if I looked at my crystal ball, I would say those, if there's some breakthrough technology, those are going to be able to command a much higher valuation than they would have a year ago. So I think it really is going to just depend on the sector.
Yeah. Have your sort of broad investment prerequisites, have they changed much? Obviously your mode of thinking has changed, but has the broad base criteria changed?
So we tend to focus on what we call impactful investments. So for us, healthcare, affordable housing, even cybersecurity, we sort of think of as impactful because the kind of effect that it has on our on people certainly in the U.S. After the Experian hack, that made us much more aware of that. So as far as we're concerned, those are areas we were already focused on. So that hasn't changed much for us. Yeah. What I am seeing, not necessarily for our family office, but I'm seeing a lot of opportunities in the secondaries market as people are, which was an area that I had never looked at before.
Yep.
And people are looking for capital. So I'm getting a lot of deals in the secondaries market that I think in the short term are probably positive or could be good investments, because I think those are going to come out stronger, in 6 months. So I think that's an area that some people might be looking at.
Yeah, secondaries were already doing well. And for those that are Markowitzing their portfolios, if you want to sell off a large chunk, which is somewhat distressed, then yes, that particular niche will do quite well.
Well, the reality is, again, the past 10 years we've had such a great bull market that people can sell and still make a profit. I do think one area that's going to have a really hard time is the opportunity zones, because those funds were set up to capitalize on people who had a big appreciation and they wanted to get the tax advantage. So they want to take it, and now if there's less appreciation, right, I think that there's going to be less incentive to put your money into an opportunity zone fund. So again, that's just my reading of the market, but I do think that's an area that might see a little bit of a shakedown.
Well, it was already some of the caveats and stipulations, and every tier of regulation always had a grey area. It was
Yeah.
a lot of push for it, but yes, you're very right. I do agree. So, in any time, good or bad, Marcia, private businesses, when they reach a certain stage in their life cycle, they require partners that can weather any storm.
Yeah.
And not just capital providers and family offices, just as we said, are increasingly they're regarded as patient capital providers who are quite risk loving. Some businesses may need an investor lifeline, while a
Yep.
small percentage are doing very well right now, just as you say, and growing faster than they can keep up with. So, in either case, an investor connection may be helpful. I always find a lot of industry folk, private businesses saying, "Well, Vic, how do you come across a family office? How do you go about finding them?" So, in this time now, Marcia, how does one go about finding true, legitimate, well screened family offices that are still doing deals? Because they are quite hard to find if you're not intertwined in
Yes.
space.
They are hard to find. There are, but more and more of them are putting up websites. More
Mm,
and more family office professionals are sharing on LinkedIn that they're family office professionals. So I definitely think there's access to family offices via LinkedIn. I think that there are still a lot of people who say they're a family office, and then you just have to ask a lot of questions, like, are you really a family office? And you may be, but what exactly does that mean? Like, some people, like, so I have $10 million to spend. Okay, so you could call yourself a family office because you have $10 million in private wealth to spend,
mm,
but then you're probably going to be an angel investor as opposed to private equity type investors. Um, so you have to ask a lot of questions. But I think that looking at, there's a lot of conferences. You can find speakers. You can Google Family Office Exchange, Family Office Association, and just learn about what a family office is. Those are great resources. ACG has a great family office program that can be a resource for people. But I think that it is a needle in the haystack finding family offices. But again, I think LinkedIn has become a really tremendously good tool for that. But it does take a lot of time to find the right people and to find the right investors. But more and more families are posting that on LinkedIn, so I would start there. That would be my
yeah.
recommendation for people.
I'm glad you mentioned ACG, of course, and I should tell the viewers and listeners that you, of course, sit on the board of ACG New York. You're part of the Family Office Committee, so thank you for your support and service. Do you think that obviously ACG is quite integral to middle market deal making, the way in which people network? But you've seen us, and we've worked in this hand in hand, that we're putting out a lot more bespoke and differential virtual endeavors. Um, I would hope that you echo in what I say, that we need more support in doing that, just imbibing people with best
Sure.
practice. It's so lovely talking to you now and seeing, what's going on in your world and how your office is reacting. I'd love to hear that from most stakeholders in the private equity community. I'm hoping you find that to be quite helpful.
Yeah, absolutely. And I will actually, selfishly talking about ACG, the membership portal has been incredibly valuable to me.
Mm,
And I would just put in a plug for anybody who's a member of ACG to make sure that they've updated their information, update their sectors, because I use the membership portal tool a lot when I'm looking for deals, when I'm looking for co-investors, when I'm looking for speakers,
yeah.
whether it's for an ACG event or another event that I need a speaker for. I generally start with the ACG member portal. So that's been a really good resource for me as well.
Yeah, no, it is a fantastic resource, and of course we're digitalizing and virtualizing
Yay!
and doing so much. So I guess the next few weeks we're still going to be cooped up at home. More of the same. What's on the horizon? More. I see you've got lots of books behind you. You're obviously
Yes.
an avid reader, but are you catching up on your Netflix shows and Amazon Prime shows and all of that jazz?
Yes, yes. Well, I have been a long time. I have often used the library apps. So I usually have like 5 to 10 books on reserve. It turns out that a lot of other people have discovered those library apps now, so I'm limited to 5 books at a time.
Yeah.
Instead of the 10 that I used to have in my app, so I am doing a lot of reading. I will admit to signing up for CBS All Access and spending the weekend binge watching season 2 of The Good Fight.
Oh, I'm not
So
seeing
I
that.
plan to
Okay.
finish that up before my free month is over.
Yeah.
And then my husband and I are huge. We love old movies, and we've been recording. Every weekend we just look through the upcoming movies on Turner Classics,
Oh,
and we've been recording movies. And so my husband and I have. It's actually nice. We're kind of having date night every night,
oh,
And it's been one of the nice things is we have been having dinner together every night. It has been 20 years where we have had since we've had regular dinner night, date night and dinner together. So I'm just trying to take advantage of some of the things that opportunities to spending time with my husband that it's only been 3 weeks and we are still doing okay.
I know.
Ask me that in 6 months, but right now I'm really enjoying that time together.
I know, economically speaking, and being a bit zen about this, it's really nice. People coming together,
Yeah.
family time, bit of downtime within it, staying at home. I'm really,
Cooking. Yeah, I
I
get to cook, right?
yeah. So that's a nice note to end on, I would say, Marcia. And it's been so lovely
Thank
to
you.
hear. It always is. Do you have any final messages to the viewers, the listeners, to the contingents within the middle market? I know we all say we'll come out of this and we'll get back to it. I know you're looking forward to getting back out there, certainly on the conference circuit. But any final message and thoughts?
Well, my final message will be: this too shall pass.
Mm, yeah.
We're it feels hard in the short term, but I really believe we're going to come out stronger at the end of this. I think we are seeing some pain points that we sort of knew about, but we hadn't really focused on. And I think we're going to. I just remember like after 9/11, being in New York and how the city changed and how people were friendlier to each other and hugging and spending time. And I think that when we come out of the other side of this, I think we're going to have that. I think people are going to be kinder to each other. I think people are going to want to spend time together. And I think we're going to come out with new friendships, new business opportunities. I think it's going to be hard for the next 3 or 4 months, but I really think that a year from now we're going to look back and see that our world has changed and for the better.
Oh, well, from your lips to whoever's listening, yes. Thank you so much for your words of wisdom, your advice,
Thank you, Vic.
letting us into your home. Certainly, I'm liking some of the books that you've got
Ooh, and
there.
there's some artwork. Can you see some artwork behind me? My little Tom Otterness
Yeah,
sculpture. Have to. I have to have a little joy in my life, and art is something that I also really appreciate.
yeah, wonderful. Thank you so much, Marcia.
Thank you.
The world is resilient, just as family offices are in this time, and we thank you all for listening in and tuning into ACG New York TV, the podcast. There's so much more of this stuff to come. Thanks, Marcia, once again, and we'll see you all very soon. Thank you.
Thank
Bye-bye.
you, Vic.